Well, welcome everyone to our live Q&A session. My name is Natalie and I am here with Dmitry. Today we will be answering all of your solo 401k and self-directed IRA questions that were submitted. We do have additional questions that come to mind during the session. Just go ahead and type them in the Q&A chat area. We will try our best to answer them all today, but if we don't get that chance, as an alternative, I would love for you to register for our next Q&A session, which will be on Wednesday, April 12th at 11 a.m. Pacific Standard Time. When you register, you can go ahead and submit your question there. But before we get started, I'm going to give a brief introduction about Dmitry. Dmitriy Fomichenko is the president and the founder of SenseFinancial LLC, which is a boutique financial firm, and he specializes in self-directed retirement accounts with checkbook control. He began his career in financial planning and real estate investing back in 2000, and today he's a licensed California real estate investor, a real estate broker, and a private lender. He's also taught hundreds of investment and financial planning seminars and mentored thousands of investors. So welcome, Dmitry. I'm glad that you're able to join us and to answer the questions.
Thank you, Natalie. It's great to be here with you guys, and looking forward to another fun session.
So let's go ahead and get started. Our first question is from Terry. How do I end a 401k when you retire, etc.?
Very good question, and it certainly happened to a number of our clients already. As you approach retirement, it's very important to plan for that. And the plan will have to be terminated when the business that sponsors the 401k or your self-employment activity ends. You do have a couple options at that point. When the plan is terminated, the plan assets will have to be distributed from the 401k. So you can take a distribution of the entire amount, which may not be appropriate for most of you. Then you can also roll over your funds and your assets into an IRA, self-directed IRA, if you have alternative investments, or just a regular IRA if you have cash. But the plan will have to be terminated at the time of retirement.
Next question is from Javier. I'm married, filing separately. Can I convert 403b to Roth for investment?
A good question, and the fact that you're married is irrelevant here. If you have a 403b, again, the converting 403b account inside of the 403b to Roth, I don't know the answer to that. You have to inquire with your plan administrator. But if your desire is to move that into a self-directed solo 401k or self-directed IRA, you certainly can do that. If it's a 401k, if you wish to move to a solo 401k, then you want to move your 403b into a solo 401k and then perform a Roth conversion. And it's very important to do that in this sequence, because if you convert it to a Roth IRA first, then you won't be able to move that into a solo 401k, assuming your 403b funds are pre-tax. Some plans, they have some Roth funds already, so those can be moved directly. If it is an IRA, if your 403b funds are pre-taxed and you wish to get that into Roth IRA, you want to move that into a traditional IRA first, then perform a Roth conversion. So obviously it is a taxable event, so it's important to discuss this with your qualified tax professional.
Next question is from Rich. How does investing from my 401k affect my RMD withdrawal?
Well, it doesn't really affect, but it's important to plan for it. If you are at RMD age, then you need to plan for it, because you're going to have to start taking distribution. There are certain calculators. We do have links to those on our website, on the client portal. So you can go there and you can actually get an idea how much you're going to have to take out every year. but it's important also to confirm those numbers with your CPA. And it's the bottom line, you have to plan for it. Again, you can continue to invest your funds, but it's important to understand what those R&D figures are so that you can be prepared and have enough cash to satisfy the R&D requirements.
Paul is asking, are there investments better suited inside a solo 401k for tax efficiency purposes, like notes, RE funds?
Well, the tax efficiency, well, generally speaking, all the investments that you make inside of your self-directed solo 401k are sheltered from taxes. So all the gains, all the income, all the profit will be sheltered from taxes. So unless you engage in an investment or a transaction that produces business income, so the business income inside of a solo 401k will be subject to unrelated business income tax, or UBIT, but otherwise all the investments are sheltered from taxes. So it doesn't really affect.
Questions also from Paul, using solo 401k to purchase investment property, paid for a home inspection, and now I don't want a home. Do I personally have to reimburse that money back to 401k?
Good question, Paul. Well, if you are considering making an investment with your solo 401k and you incur certain expenses for that investment, as an example, in your case, you paid for the home inspection. That is expense of the 401k. You personally cannot reimburse your 401k. That will be prohibited. And it's simply expense that you incur. There is no reimbursement for that. All expenses that are directly related to the investment of the 401k are just that, expenses, and you can't reimburse your 401k, or your 401k cannot reimburse you. You got to keep everything separated and at arm's length.
Next question's from Peter. Can you describe typical terms for non-recourse lenders for investing in income property using solo 401k? Example, the percentage down, months of reserve needed, fixed rate, 10, 15, 30 years.
Well, good question. Just a little bit of a background for those of you who may not be aware of this, is that when you invest inside of a self-directed IRA or 401k and you wish to use leverage, you can do that. You can finance the purchase of an investment property inside of your self-directed retirement account using leverage, but the IRS rules prohibit you from providing personal guarantee. Therefore, the loan must be non-recourse. And non-recourse means simply that there is no personal guarantee. So the investment or investment property in this case will be the only security for the loan to the lender. Typically, this is a higher risk because, again, there is no personal guarantee. So the down payment requirements typically higher. In most cases, it's going to be at least 30% down, 30 to 40% in some cases. And again, I'm talking about just a majority of the lenders. There is certainly a possibility for you to find a private lender who will agree to maybe lend you 80% LTV. So that's a possibility. But those lenders that specialize, typically, they have 30 to 40% down. They do require to have not months of reserves, but typically it's a percentage of the purchase price, and that is 10 to 15%. So you're looking at, again, an average 40 to 50% of the purchase price. That's how much cash you need to have based on the purchase price in order for you to qualify. And there are various programs out there. There are some that are adjustable, some that are fixed. There is a 15, 10, 20 years, and I believe there are some 30-year fixed loans as well. We do have a list of lenders on our website. So if you go to SenseFinancial.com and then click on either self-directed IRA or Solo 401k, on the drop down, you'll see non-recourse lenders list there. But recently, just a few weeks ago, we did a webinar where we invited non-recourse lenders, Solera National Bank, to come out and really spell everything out, how non-recourse financing works. So I will recommend you find that video, reach out to us. You can find it on our YouTube channel. By the way, if you're watching this, you certainly want to like this video and you want to subscribe to our channel so that you can get notified. We constantly producing educational material so for your benefit. But get that video. I think that will be really helpful. But ultimately, you want to reach out and talk to those non-recourse lenders directly, because programs change sometimes and you're not affiliated with those lenders, and you want to get accurate information from the source directly.
Next question is from Kenneth. How do you change the Solo 401k to a Roth? Will future contributions after the change be taxed?
Well, Kenneth, I think what you're asking is how do you perform a Roth conversion? So the proper term is a conversion. If you already have a Solo 401k with us, then you don't need to change your Solo 401k. Every Solo 401k plan that we establish do come with the Roth provision, allowing you to make Roth contributions and allowing you to perform a Roth conversion on your funds that you already have in your 401k funds that are pre-tax. So again, if you already have the plan in place and you wish to perform a Roth conversion, you can do so. We do have a step-by-step guidelines on the client portal, but typically you decide on the amount that you wish to convert. Then you complete a Roth conversion form, which you again can access on the client portal. And again, I cannot emphasize this enough. The Solo 401k client portal is a resource that we designed for our clients to provide you with all the tools that you need to maintain your Solo 401k. So you go there to the maintenance section, click on the miscellaneous forms, and then you can find the Roth conversion form there, complete that. And then you need to open designated Roth account, because you cannot commingle your pre-tax funds with the Roth funds. You have to keep them separate. So once you complete the conversion form, then you simply move the funds from the pre-tax account to the designated Roth account. And then obviously, as you aware, Roth conversion is a taxable event. So you do want to provide us with the copy of this form. We normally send a reminder in December, but it's your responsibility. We are here to assist you, but ultimately, as the plan administrator, it is your responsibility to be responsible for things like that. So you want to reach out to us at the end of December or January so that we can help you prepare 1099-R, reporting that event to the IRS. And then you can give a copy of that to your CPA, who can then report that on your tax return. And I'm sorry, the second part of future contributions after the change be taxed. Well, it depends which contributions you're making. If you're making pre-tax contributions, those are pre-tax. They're not taxed. But if you do have the ability to make Roth contributions, so Roth contributions are already taxed, and qualified distributions will be tax-free.
Next question is from Jacqueline. How soon after you open a Solo 401k do you have to start using funds to invest?
Well, there is no rule or guideline how quickly you have to invest the funds. It's just like if you open an IRA or if you participate at your employer 401k and you make a contribution to those conventional accounts, it's up to you. You're going to have to pick the investment, and you can just sit on cash. Obviously, it's not beneficial for you to sit on cash because cash is losing its purchasing power to inflation, especially in this environment when the inflation is so high. But there is no minimum requirements or no time frame that you have to invest the funds. But it's to your advantage to do it as quickly as you can find the investment.
Okay, Paul is asking, is there a minimum annual contribution to a solo 401k plan?
Paul, good question. There is no minimum. There is maximum, but there is no minimum. And you're not even required to contribute every year. So if you have a year that maybe you don't have as much income and you're not inclined to contribute, you don't have to. But you don't want to be in the position where you established a solo 401k plan and never contribute to it, because that may raise a red flag with the IRS and your plan may be deemed as inactive. So you do want to make occasional contributions every couple of years, every few years you do want to contribute. So this way you can keep the IRS or your plan out of the IRS radar, so to speak.
Okay, next question is from Tanya. Can you invest from your solo 401k into cryptocurrency in the open stock exchange?
Well, Tanya, if you're asking about buying cryptocurrency, I don't believe you can do that with the stock exchange, because stock exchange is to buy stocks and cryptocurrency is not stocks. And you do need to open an exchange account with some of the exchanges that are out there. So you need to establish an account in the name of the 401k, and then from there you can buy cryptocurrency. But I don't believe you can do it on the stock exchange. There might be some funds that you can invest in, possibly, but you can buy cryptocurrency directly from the stock exchange.
Okay. Next question is from Sharon. Would buying or selling a real estate asset owned by a Roth Solo 401k eliminate the need to utilize a 1031 exchange, since it already grows tax-free?
Good question, Sharon. And the answer to that is actually it's irrelevant whether it's a Roth Solo 401k or a pre-tax 401k. If it's a self-directed retirement account, an IRA 401k, whether it's pre-tax or post-tax, retirement account is already tax sheltered. So yes, there is no need for a tax using a 1031 tax exchange, because when you sell a property inside of a solo 401k or an IRA, again, regardless whether it's a traditional or a Roth, that sale is not a taxable event, because the plan sells the property. Your 401k sells the property. So it's not, when you sell the property inside of a 401k, the gains are sheltered from taxes until distribution if it's a pre-tax. If it's a Roth, it's going to be sheltered until the day of the distribution, and then qualified distribution will come out tax-free. But you're exactly correct. 1031 is not needed because 401k is already tax shelter. So there's no need to use this mechanism.
Joseph is asking, do you get to keep any of the proceeds from the rent or sale of a property held in Solo 401k? Are you allowed to get credit cards on behalf of the Solo 401k to cover expenses for the property?
Good question, Joseph. If you're asking, do you personally get to keep any proceeds from the rent or from the property that your 401k owns? Absolutely not. You don't own the property and you don't have any rights for the rent or any proceeds. Your 401k is the legal owner of the property, and 100% of the rent belongs to the 401k. It must go back to the 401k. Obviously, as the account holder, you have the right to take a distribution from the 401k, subject to applicable taxes and penalties if it's an early distribution, but you can't pocket any of the rent. 100% of the rent must go back into the 401k. And then second question about the credit card. The problem with the credit card is that you cannot get a credit card for the 401k because as a disqualified person, you are not allowed to provide a personal guarantee, and no credit card company will issue a credit card to you unless you're willing to personally guarantee it. So therefore, it's not going to work with the solo 401k. That will be a prohibited transaction. But what you can do is the work around that is to get a debit card, because you can have a checking account for your solo 401k, and you can request a debit card, and you can use your debit card in the same manner as a credit card. You can get it with the Visa or MasterCard logo, and you can use it online to pay the expenses that are directly related. That's the key. You only can use it to pay expenses that are directly related to the investment that your 401k owns. And that's your workaround. That's your solution. So you cannot have a credit card, but you can have a debit card and use it in the same way that you would use a credit card.
This question's from Danny. What if you have a solo 401k and never reported to the IRS?
Well, good question, Danny, but it's very important for you to understand the different reporting requirements. Okay. Number one, as the document provider, we are responsible for doing what's called the sponsor reporting. So every plan or every business that using Sense Financial prototype plan documents is reported to the IRS. IRS is aware of the existence of the plan. When the plan is created, and we obtain a tax ID number for the plan, and then every January we're responsible to send the report to the IRS reporting your plan as an active plan or inactive plan if you wind it down. So that's one reporting. So again, IRS is aware of the existence of the plan. But then on top of that, there are a couple of reporting requirements on your end. Number one, the contributions. You're responsible to report contributions to the 401k on your personal tax returns or on your corporate tax return, depending on the type of contributions. And then on top of that, you're responsible for sending the 5500 EZ form. This is a report, annual report to the IRS. And this is required if the total plan assets exceed $250,000. We actually recommend filing this report regardless of the total plan assets. So even if it's under the threshold, it's a good practice and good idea to submit that report to the IRS for a couple of reasons. So you get the record of the plan details with the IRS, and you also get the statute of limitation going. So it's a good idea to do that. But you're not required to do it if it's under $250,000. If it's over $250,000 and you do not report, the penalties are very steep. So it's very important that you be on top of that. Again, we do send reminders, and we keep you informed of the upcoming deadlines, but ultimately you're responsible, and if you are obligated to report because of the requirements and you fail to do that, penalties are very steep. So you want to make sure to do that.
Next question is from Robert. Is there any issue with having more than one account associated with 401k? For example, a checking account for ongoing transactions and a money market account for the larger cash holding with a higher interest rate.
Well, Robert, you certainly can have more than one account for your solo 401k. You can have as many accounts as as needed or as practically needed, because there can be situations like you may be needing just a checking account for the 401k, but also if you sitting on some cash and you want to put that in a money market account, you can do that. Also, the requirements is that you must track different types of money for different participants separately. So you can have, let's say if it's a husband and wife as together participating in the solo 401k, as they own a business together or they're involved in the same business. To give you an example, you may have the following accounts, or you may be required to have following accounts in your solo 401k. So if you're making elective deferral contributions for each participant, so you need one for each. If you're making profit sharing contributions, you're responsible for tracking those separately. So you need another couple accounts. And then if you're making Roth contributions, then you need designated Roth accounts. So you may have 3 accounts for each participant in the same solo 401k plan because of different types of money. And then if you have rollovers, then you need a separate designated account for rollovers to keep track of those funds separately. So you certainly can have more than one account.
Next question is from Peter. How long can you borrow funds from the solo 401k?
Peter, I believe you're asking about the participant loan, and every plan that we establish has the participant loan feature, and the participant loan allows you to tap into your 401k funds at any time before you retire. So it's a nice feature to have. You don't want to abuse it, but it's a nice feature to have. And the participant loan allows you to take a loan for any reason. It's a 5-year loan. It must be made, you must make amortized payments. Those payments must be made either monthly or quarterly, and that is fixed at the time of you taking the loan. So it's not a loan you take and then you wait 5 years to pay that off. No, it's important that you start making amortized payments immediately, a month or a quarter, following quarter. And again, it's 5 years. The interest rate is set at prime plus 1%. And again, those must be amortized payments.
Mano's asking, is it allowed to transfer real estate investment into personal name to solo 401k?
That's not possible. So you're talking about transferring real estate that you personally own to 401k. There is no possible way of doing that. You can put cash or assets into 401k into one of the following ways. There's only 2 ways. You can take existing retirement accounts, 401k, 403b, 457, an IRA, and you can roll those over to a solo 401k. So that's one way you can move. So if you have a real estate that your self-directed IRA owns, it's possible to do in-kind rollover of that property into the 401k. So that's the only instance when you can move the real estate property. So that's number 1. And then number 2, you can make new contributions to the 401k. There is a contribution limit every year based on your business income. You can and you can only contribute cash. You cannot contribute assets into the 401k. But there is no limit on the rollovers. So if you have a self-directed IRA with $1 million, you can move entire IRA into your solo 401k. There's no limit, but there is a limit on the contributions. But assets that you personally own, there's no possible way to move them into solo 401k.
Joseph is asking, can you explain investing in REITs and filing a 1099 DIV or K1?
Joseph, if you're investing in REITs, typically REITs will produce 1099, not a K1. So if you receive a 1099, then that's pretty straightforward. Whether you, also very important is Joseph didn't specify you're talking about an IRA or 401k. Now, the 1099 will be treated the same, whether it's an IRA or 401k. There's no tax consequences. But if you are talking about a K1, if you receive the K1 as a result of investing in some kind of a fund or a syndication, in a 401k, there won't be any tax consequences. But in an IRA, depending on the type of income, if it's a business type of income, then there might be some UBIT consequences. So you do want to talk to your CPA and actually a little bit further clarification. If you're receiving a K1 from investment in a fund or a syndication, generally speaking, most of those investments, they will use leverage. So there will be probably UBIT implications in an IRA, but 401k is exempt specifically from UBIT on leveraged real estate. So nothing to worry about with the 401k. If you're doing this inside of an IRA, you have to watch out for UBIT.
Next question is from Paul. Can you invest in RE funds within a solo 401k? What is the general procedure?
You certainly can invest in real estate funds with your solo 401k. You have to contact the sponsor. They will provide you with the paperwork. You will complete that paperwork. You will put your 401k as the investor. You will provide them with the tax ID number of the 401k. So it's very important that title to all the investments will be in the name of the 401k, and then your investment sponsor will guide you on the rest. But it is pretty straightforward.
Shushma is asking, how do I set up a 401k?
Well, good question, Shushma. I think the first step is to reach out to us and talk to one of our experts. We want to make sure that you're eligible for it, and if you are, then we'll take you through the process. We will set up a profile for you, give you access to the client portal, and then connect you with one of our account managers who will guide you through the process. But it's a fairly quick process, and once we receive all the information from you, typically the plan can be set up in 2 to 3 business days.
Michael's asking, what's the best way to self-direct the health savings account?
You can self-direct an HSA, and there is not many options out there right now. But I've been receiving inquiries, and we spoke with with Solera National Bank. I spoke with the president of the bank just last week actually about this. So they're looking into offering this or making this offering to our clients, because you do need a custodian that allows this. So at this point, I don't have any suggestion for you, but hopefully we will have the good news, and Solera will start offering this in a near future.
Next question's from Gary. How do you calculate RMDs, and when do you need to start taking them?
Well, RMD has actually been raised recently. I believe it's 74 right now, which is, I think, will continue to be raised. So in the next few years, it's going to go up to 75. But there are calculators. We actually have a link to the calculator on our website. So you can go there, you punch in your age and the balance in your IRA or 401k. By the way, the 401k RMD will have to be calculated separately from IRAs. So if you have multiple IRAs, you can lump them all together, and then you can calculate the RMD, and then you can only use one account to take the distribution from. But 401k is to be treated separately from the IRAs. So you type the balance, and then you type your age, and then you'll see what the RMD is. But ultimately, you do want to speak with your CPA and have your CPA provide you with the guidance on that.
Next question's from Skip. How do I set up a checkbook IRA?
Skip, again, another good question, and it's a little bit beyond as far as giving the details this session, but you want to reach out to us, and we'll talk to you, make sure it's a good fit, and then if it is, then we'll connect you with one of our account managers who will take you through the process. It takes longer to set up a checkbook IRA. But also varies depending whether you're going to use an LLC or a trust, and then we'll help you get that set up. But reach out to our office.
Next question's from Doris. How much gross does one need to make to qualify for solo 401k?
Doris, you do. There is no a threshold, but the bottom line is that you must have legitimate business that generates earned income. It has to be more than a hobby. So if you're doing something that generates a couple of $100 a year, that's not a business. So that's more of a hobby. So and there is a good article that IRS has. You can actually Google that. Hobby versus business on the IRS website, and you can have some pretty good feedback there to your question. But again, there is no minimum, but it must be a business. In fact, you can establish a solo 401k plan for a brand new business that you just started that may not have any income yet, but it's important that you have expectations of making profit from that business. But it cannot be a hobby.
Next question is from Thomas. How can I secure my 401k and savings from the bank meltdown?
Good question, Thomas. And just this past Friday, we had a webinar with Solera National Bank, which is our preferred bank and custodian for our IRAs, where I invited Creighton, the president of the bank, and we spoke about just that. So reach out to us or go on our YouTube page, and you can locate the recording of that webinar. So again, there isn't a simple. Well, I guess there is a simple answer to that. If you have under $250,000, you've got nothing to worry about that because of the FDIC insurance. Your cash is protected there, and most people don't have that amount. Most people don't keep that kind of a cash unless it's a business maybe. But if you have more than 250,000, then break it down into a couple different accounts at a couple different institutions so that you get the protection. But there is some really good nuggets and some good feedback from Creighton on that webinar. So be sure to get a hold of that recording and watch that.
Well, this concludes our Q&A session. Thank you, everyone, for joining us, and thank you for asking the questions. Our next Q&A session will be on Wednesday, April 12th at noon Pacific Standard Time. So we are looking forward to some of you joining us again, and we hope you all have a wonderful day.
Thanks, Natalie, and thank you all for joining. I enjoyed answering those questions, some good, intelligent questions from you. If you guys did not feel that you did not get a full answer, feel free to reach out to me directly. We can schedule one-on-one, and I can talk to you specifically about your specific situation and address your question. But again, thank you for joining, and enjoy the rest of your day.